Today we're going to be talking a little bit about cash versus profit. What's the difference? What do you have in your bank and what reflects in your bookkeeping? Profit is what reflects in your bookkeeping. So, when you hire an accountant to do your bookkeeping, you're going to notice how everything is allocated. It's called the general ledger. That's how you see where everything is being spent on, whether it's your cost of goods sold, it's your subcontractors, it's your fixed expenses. You're going to see all that. You're going to see how much you spend on utilities, how much you spend on maintenance, which is good. This is why you need bookkeeping, to be able to allocate all those expenses correctly so you can have an accurate net profit. You don't do that, it's not going to reflect correctly at the time of tax season. And it might be that you can be missing some items. So it's always very important that when you're doing the bookkeeping, you are letting your bookkeeper know or your accountant know all the accounts where you're using money to grab for to pay for your business needs or your business expenses. Now, cash is actually what's in your bank account, and it's going to be different, completely different from what reflects as your net profit. For example, your profit and loss might say you have $100,000 in profit, but your bank account is going to say something completely different. What does that mean? That means sometimes that your receivables are not up to date, you're not reconciling correctly your bank accounts, or the timing is just off on everything. You're not accounting for everything that should be accounting. You also need to make sure that your depreciation is being accounted in your bookkeeping. If it's not accounted in your bookkeeping, it's probably because you don't have any depreciation. And some stuff is depreciated in different ways in your tax form. An example of depreciation being accounted in a different way. Let's say you're a business owner and you have a net profit of $60,000. If you're a single member LLC and your vehicle expenses like mileage are not accounted in your profit and loss, you're going to see a net profit less than what you see on your P&L. So it's going to be different when you're filing your taxes. Now, what if you have a Schedule E? A Schedule E is rental income. Now, you're going to show the depreciation on your home in your Schedule E, but it's not going to reflect on your books because your rental income has nothing to do with your business. So things like that, you need to make sure that you're asking the right questions to your accountant so you can understand your tax form. A couple tips that I recommend for you to be more aware of is your bank balance. Always keep track of what's in your bank account and how much is in your bank account. As much as we would love not to be checking our bank account every day, but honestly, it's the first thing I do every morning because you just never know. Another way is your cash flow. You want to make sure you know where your expenses are going and what you're spending on. So make sure that you know what the cash flow is. Accounts receivable. You need to make sure that your clients are paying you. You could be losing so much money without any accounts receivable. So when you invoice, make sure that you follow up with your clients to make sure that they're paying you. If they're not paying you, you're not getting in the money that you are deserving of. You need to make sure that you're paying your bills. Don't put them off. One thing that I always tell my clients is that if they're being invoiced on net 30 terms, pay it at net 30. Don't just right away pay that invoice. What that means is that you keep your money longer in your bank account, which can accrue interest. You want to make sure that you are accruing that interest, even if it's just a couple dollars. That's a couple dollars that nobody else is going to give you. So make sure that if that invoice says net 30, pay it at net 30. That goes for all your bills. Make sure that you're paying at the terms and you keep your money in your bank account as long as you can. Another thing I see go completely wrong is growth. Growth can be such a beautiful thing, but if you don't have a good cash flow of what's coming in, sometimes you're just going to be throwing that money out there without any control. And instead of really seeing the profit of that, you're going to see the negative in it. You're not going to see what the real cost analysis is from not keeping track of it correctly. So make sure that if you know that you're having more sales, that you're even more diligent with your books. So let's recap here. we discussed profit versus cash and the difference between one and the other. And we learned that if you don't know what cash flow is, you don't know how to handle your business. So make sure that you know what cash flow is so you can better understand your business and have long-term sustainability. A healthy business is when you understand that cash and profit move together. Given everything that we've learned today, Midwest Bookkeeping is here to help you. If you like this content, please stay tuned for the next video.